RHB Investment Bank says the deployment of COVID-19 vaccine could be a new demand source for rubber gloves at up to 18 billion pieces a year. That's assuming that 60% of the world's population of 7.5 billion people will get the vaccine in 2 doses annually. RHB analyst Alan Lim explained in a note today that each contact with a person should lead to the usage of 1 pair of disposable gloves, hence the expected short-term demand for 18 billion pieces. If the vaccine protection period is only up to a year, he said this 18 billion pieces per annum demand will recur on an annual basis, equivalent to 6.8% of the 263 billion pieces per annum demand for gloves worldwide in 2019. Lim said RHB is maintaining its overweight call on the rubber glove sector as the long-term demand outlook for gloves remains positive. Citing the H1N1 influenza outbreak as an example, Lim said that after the outbreak ended between 2009 and 2010, glove demand dropped slightly in 2011 on a year-on-year basis by 1.3% or 2 billion gloves to 148 billion pieces a year. So, a vaccine deployment itself, he said, could boost global gloves usage by up to 7%. The government hopes to collect 127 billion ringgit in taxes this year and 143.9 billion in 2021. Quoting Finance Minister Tengku Datuk Sri Zafrul Abdul Aziz, Purnama said Putrajaya recognises the challenges the Inland Revenue Board has to go through during the COVID-19 outbreak as it seeks to find a balance between the hardship faced by affected traders and its responsibility as a tax administrator. However, it is important to ensure that tax collection is always at an optimum level, since IRB's ability to operate efficiently and effectively would facilitate the government in realising its recovery and development agenda as outlined in Budget 2021 and the 12th Malaysia Plan. Zafrul went on to say that efforts to realise Putrajaya's agenda for the people's well-being and the nation's prosperity will not be achieved if there are insufficient finances. In September, the IRB said it was revising downwards its tax collection target for 2020 from the 154 billion ringgit projected in January, prior to the implementation of the MCO. It added that flexibilities would be granted to struggling companies on a case-by-case basis. Petronas Gas posted a 36.9% jump in third quarter FY20 net profit to 591.01 million ringgit on higher unrealised forex gain. Revenue grew 5.2% to 1.41 billion ringgit, mainly due to the regasification and utilities segments in line with new tariffs for the regulatory period effective January 1st, 2020 and higher steam and industrial gases sales volume. However, these were offset by lower revenue from its utilities segment due to lower electricity sales volume. The group declared a third interim single-tier dividend of 18 cents per ordinary share for FY20. On a yearly basis, Petgas has declared 1 ringgit in dividends so far, compared with 50 cents a year ago. Commenting on the prospects, Petgas said its transportation and regasification segments are expected to continue contributing positively to the group's earnings under the new tariffs. Meanwhile, the group's gas processing segment is seen remaining stable on the back of its strong and sustainable income stream under the second term of the 20-year gas processing agreement effective from 2019 until 2023. Petgas does not expect the pandemic to significantly impact the group's overall earnings. Airasia X sank deeper into the red in the third quarter as revenue took a nosedive amid travel restrictions imposed to curb the spread of the COVID-19 outbreak. Net loss widened to 308.5 million ringgit from 229.89 million, while revenue slumped by 94.1% to 59.9 million. Finance costs also rose on higher interest expense on lease liabilities and the impact of discounting effects on financial instruments. Like the rest of the carriers, AAX is grappling with the impact of the COVID-19 pandemic and the ensuing border closures. It is now counting on its plan to restructure 63.49 billion ringgit worth of debt owed to 1,200 unsecured creditors, including Airbus, Rolls-Royce and Malaysia Airports Holdings. In a filing to Bursa, it said the implementation of the scheme is currently ongoing and its success is critical to the ability of the company to raise new funding and to continue as a going concern. Bumi Armadas' net profit fell some 44.2% to 85.62 million ringgit in the third quarter of FY20, mainly due to the absence of a gain on disposal in the current quarter. Quarterly revenue was 6.9% higher at 564.44 million ringgit. Bumi Armada attributed the lower earnings to a gain on disposal of joint ventures and property, plant and equipment, including Armada Perdana, recognised in the third quarter of FY19, as well as higher depreciation arising from revision of vessels' useful lives and residual values in the year 2020. The company also saw losses from its share of results of joint ventures and associates. Meanwhile, operating income also fell 37.8%, in addition to an impairment of 16.15 million ringgit this quarter. On prospects, Bumi Armada said oil prices are not expected to strengthen significantly over the next 3 months due to the global economic turmoil and ongoing concerns over the COVID-19 pandemic. It expects the FPO business to be relatively stable through to the end of this year, while the OMS business is anticipated to be weaker.